Welcome back, everyone. This is Monty. No edits, no cuts, off the cuff. I can never get used to doing saying that. So again, here I am again. So here is my trade confirmation again. I bought another $25 worth of Canadian shares, so it's a fraction in this time because I'm buying it weekly as ordered. And in terms of my overall performance, we are sitting above 8% according to the last month or so. All time 1% higher than my deposits, and this is where we are looking at in terms of value. So again, unsurprisingly, no news about GameStop doing really well. And if you want to do it on a technical point of view, because like before we go technicals, I will show you here GME like at a fundamental level as well. Again, there's a lot of good reason to be hyped for um a lot of good and bad reasons. Let me see. Q1 results. I think Amazon has reported the Q. Yeah, today announced their financial results in the first quarter ended. So yeah, so there's already some major companies that have already reported in Amazon, Target, and right like these guys will be are definitely going to be hurting down. Yeah, so let's look at my favorite website I'm using. By the way, anyone can access this website on Joseph Carlson's YouTube channel. You can find it um, by subscribing to his Patreon. I would start subscribing on Thursday coming up, Thursday for June 1st. So you can get a free full month trial of using this platform called Culture Insights. So, anyways, let's look at Amazon before we look at GameStop. Amazon. So you can see here on their cash flow balance, right? They just reported a negative cash flow balance for the first quarter, and it's unsurprising. Considering, let's see, what's the news talking about? The abrupt departure of AWS. So there's people leaving. Won't participate in AI hype for 3 reasons. But again, I'm still bullish with Amazon in general. I'm also invested in them as well. This whole AI stuff is taking off. It is the flavor of the year. But if we're talking about price action, let's see. Let me pull up price action here. Amazon. I'm gonna stop looking at bum fights for a second here. So if we look at Amazon here in this case, Amazon, when I bought it, it was like roughly, let's see, if we're looking at the daily chart, let's look at the daily chart. So I bought, no, I need a farther zoom out here. Let's look at the last 6 months. So I bought roughly around maybe, has it been a year already? Hold on, a year. So yeah, so I bought it around maybe like roughly around here. What percentage I am right now? Let's see. Um, let's see. My first trade with Amazon was, let's see. When was my first trade with Amazon? So I'm down all time 23%. So somewhere around here, maybe 23% from here. I don't know. I'm not gonna do math top of my head, but like sometime early of um in 2022, like the beginning of the year, and then it started crashing down again. Let's look at the week to week or quarter to quarter maybe. So this is closing at 106. So I bought roughly around here, this candle right here. So we're looking at the end of the year. Yeah, end of the year of 2022. If you look at the weekly here, end of the year 2022. So this is 156. Yeah, so yeah, it has been long since I bought into it. So around, if we more accurately say, most likely around August is when I started buying it. So, anyways, there's a strong support right here. From this point on, this area, like obviously, there's a lot of people have the big investors, big financial firms, have clearly sold, because they're just not in favor with how they're operating in terms of cash flow, because they have reported quarter after quarter negative cash flow balance. It is a very ugly balance sheet. It's just not that great. It's not the prettiest thing in the world. Sure, they show their good revenue, but like the thing is, their operation expenses are also like out of this world because they're doing so much R&D with how they're doing, and they're still trying to make the payoff of having warehouses. But on their cash and debit debt on hand in here, they're flattening out their debt and they're flattening out their cash. So there is some headwinds coming through this year, but like I could see profitability if anytime they want. If they want to do any kind of profitability, remember this is free cash flow that's not compensated. So if we adjust it with stock-based compensation, right? So you can see there's a lot of stock-based compensation coming through, but like they're starting to level off with stock-based compensation. So if you look at the free cash flow adjusted, right now it's not looking so hot. But once they have control their free cash flow through their compensation, because remember this right here is the warehouse saga, and they also have always reported like fairly poor earnings during the first quarter of the years. You can see like this is every single year, so it's just a consumer cyclical thing. So it's not unique to Amazon. I mean, Target is worse. Target. There we go. TTT. So yeah, like this is not unique to Amazon. Although Target was doing really well with their free cash flow until recently. So am I seeing this as a buy? No, I personally don't see this as a buy. There's a lot of negative public sentiment with the company right now, and I just don't like what's going on here. This is poor management in a nutshell. Like they're burning so much cash, they're increasing long-term debt. It's not like Amazon. Look at this. There's a very big difference between long-term debt and like leases. Capital leases are like buildings you can like let expire, but debt is like you have obligations to pay. Amazon doesn't have that crazy overhead they're dealing with, and plus they can always pay back all their long-term debt if need be because they have the cash on hand and they have the ability to make that money to make that happen, as shown here, right? So if you look at Target, right here, okay, they showed some level of growth going on in terms of revenue, but in terms of expenses, it's not doing so hot. And if you look at their stock-based compensation, it's not doing so hot either. So if we do this, right? So they're still giving compensation, even at times where they're just poorly operating. Like, why are you giving compensation during poor operation times? And the reason why they do that, it makes their books look better. If because the free cash flow doesn't factor in compensation, right? So you can see the stock-based compensation affected 36% negatively on the free cash flow. So obviously they could have had a better number, but when you adjust it with free cash flow and stock-based compensation, it's actually lower. And this free cash yield is also really small. It's not that great. And if you compare it to Amazon, Amazon's not doing so hot either. Free cash flow wise, because they hit negative, so there's nothing to show here. So it is actually effectively impacted quite a lot. Even though it shows a positive number, yeah, it has affected their free cash flow by quite a margin, because that's the positive stock-based compensation, and that's the negative free cash flow that comes with it. So, but if you look at free cash flow by itself, it's just bad. So really really ugly balance sheet. So why does that matter? Because with GME, in the next, we don't know when exactly they're going to be reporting their quarter one earnings, but it's sometime this month. So hopefully, some people are saying in 2 weeks. It is what it is. But I would not be surprised if both cases of showing negative numbers. So if we're talking about negative numbers, free cash flow basis, we're looking at maybe negative possibly 20 million, 30 million, just like their historical lows, right? For quarter ones. I'm making a judgment based on how they've been operating lately. So trajectory wise, like between maybe negative 20 and negative $50 million, worst case. And then and then on a best case scenario, they'll show positive numbers in the 20 to 50 as well. That'd be like the most ideal goal to see positive free cash flow. Because their expenses have been very well maintained. Like you can see that like quarter after quarter, it just gets more and more lean, and there's a lot of public sentiment of being good with the company right now. There's a lot of support happening. You can see right here. I haven't changed this chart by the way. Um, there's a lot of support here. There's a lot of strong resistance here. Strong support down here, and there's you know for some reason this always happens with every single stock over the weekend. Somehow everyone just became a really good trader and decided to I'm gonna buy it now, and that's why the price surged. So this price will contract most likely tomorrow morning. We're probably going to see a possible contraction because once everyone get over their honeymoon over the weekend and making their buys over the weekend, because it was a long weekend for the States, Memorial Day, we're going to see probably some price contraction, because even though like I drew this line like a while ago, it has already like super succeeded what I expected in terms of my little chip here, my little Dorito. But again, I don't see this dropping anytime soon, because it's right now within the channel, right? So if it supports around here, it's most likely going to support around here for the next 3 months, really. Like if it stays flat like this for the next 3 months, I wouldn't be surprised at all. Just because I'm just making a judgment based on what I'm seeing on the RSI here, because the price action seems to be around this channel between of $23 and $24 that everyone has been kind of pricing in this point, because you can see that in standard deviation, like it's almost going to zero. So like it seems like that this has been priced in at this point. I wouldn't say it's overpriced. Well, obviously it's overpriced today because it went above and beyond 100 on the CCI and the RSIs. Well, not 100 in the RSI, but like it's going on the bigger numbers. It's being a little bit overbought, but overall, on a TA point of view, like from a 4-hour basis, if you're doing a swing, we're still going on a strong uptrend, but probably tomorrow we're going to see possibly a strong downtrend, just to balance it out. Just because, some reason, every time a weekend finishes, everyone thinks they all know like what to buy, and so they make their all buy orders like pre-market on Sunday or Monday, in the morning, and they think they just know what's going to be the week. And then throughout the week, obviously there's people buying and selling, because they're just trading, right? These are traders. For long-term investors like myself, I really don't care what happens to the price action, because I want to see the flywheel effect. We'll talk about that next week. But like GameStop's at the point where if they show growth in the next 2 quarters, and if there is no crazy event that's going to happen in the next year or so, which I hope so, because I do want to keep buying more shares at like as much as I can with $25 a week, just to prove my point that I will make the best returns with just $25 a week. I would like to see them kind of keep their lid closed, because I think people need to understand that there's like literally no news talking about GameStop on a positive. Because if you notice recently, they all just want to talk about Nvidia. I don't think Nvidia is that great personally, at a fundamental level, because there's a lot of things that I don't I wouldn't say know everything about it, but like there's a lot of things that I would be wary about with with the way they're doing things, because sure they can make crazy sales and stuff like that, but like again, your free cash flow has been looking really great. Honestly, it looks like a really good company with operations. But I don't know too much about the industry right now. But like, there is a strong supply chain issue still. We are still hurting, and this is coming from me, who buys electronic parts from Taiwan and China and all those kind of countries, who are able to supply us chips for our machines as well, because I'm in the specialty machining industry, and we need those chips as well as much as everyone else does to make our machines and they make their cards, right? So uh, I just don't see how this be sustainable at all, because right now I think it's just them just saying AI, and just investors wants to get into this flywheel before they miss it. And I can totally understand where they're coming from too, because Nvidia is a strong competitor in this industry. As you can see, like, it's already just moonshining here. So we got super trend showing up here, showing a strong trend going up that way. Let's see. Let's open up CCI. Let's pull out standard deviation, moving averages. Where's exponential moving averages? I don't know why my thing is not fixed. Exponential moving averages. My thing's not set up for some reason. I have to fix this. But anyways, yeah, their moving averages are just getting skyrocketing at this point. They're hitting their all-time highs, and I don't personally, I don't think this is a buy. The price point has already overshot of his valuation right here. It has definitely overshot their valuation, because on a free cash flow basis, like, it's impressive, but like, you guys are in line of your, like, you guys are beating, like, these guys are beating their 2021 results, and then their, let's see, but they didn't beat their 2022 result. They're actually making less cash flow than their 2022 result, because remember, these guys are paying a lot of compensation to keep these engineers, right? You got to be careful with this kind of company, because they have to keep retain. Look at this right here. 56% of their cash flow has been chopped off from what their already low free cash flow yield is. And so this is a very important number that everyone has to understand. This number is very important, because this is cash that is in their pockets right now, like, actually in their pockets, after paying out their shareholders, paying out the bondholders, right? This is very important, right? And that's why I always keep looking at this, like, how much cash are they actually operating as a operation point of view, because operation income is a very important metric to see how they're profiting. And right now they just don't look as profitable compared to other companies. So if we're going to compare it to Nvidia, like, even as simple like Texas Roadhouse, like, I'm gonna look at a completely different industry here, but like, their free cash flow is just nicer. It's predictable, right? You can actually follow this. I love this company. It's great. I have, like, great great respect for how they operate. They're operating at such a good margin for a restaurant, right? A sit down restaurant chain. And I really want to emphasize this, because like, they're operating very well. They're very disciplined with their money. They're not, they have zero debt. They have zero long-term debt. They reported zero long-term debt. They have paid off all their debt, right? And they have more than enough cash to continue operating. Again, capital leases is related to, lease obligations. But remember, like, this can be a good thing too. They can actually sublet these as well if they don't want to use their leases anymore. But overall, like, their expenses have been, you can see, very well tamed. Like, sure, it has increased over time, but it has also shown revenue also catching up with their expenses, right? So they're operating at a very good margin, in my eyes. And they have their shares outstanding has been constantly, slowly dwindling, and that's what I want to see. I want to see share compensation being, shares being, reduced, so it increases my equity of the company. In this case, the shares here are still all time, ups and downs, like a roller coaster. People are, redeeming their shares. Some people are just buying. There's not a whole lot of buying on the shares. Like, you can see, there's a whole, like, a lot of sales going on, right? A lot of sales going on. So the insiders are, like, they know what's happening, right? These insiders who are selling these transactions, right? Like, I really want to emphasize this a lot, is that these people who are insiders in the last, like, these are reports. These are recent reports too. Like, this is January. This is like this year. A lot of sales going on, because right now everything's being propped up right now. All the companies in the tech sector are just, for some reason, on a dime. Just happened to be bullish. What happened to 2022? Everyone just hated it, right? Everyone just, back in 2022, everyone just didn't like it at all. Look at Nvidia just crashing, and then now out of nowhere it just skyrockets. It really doesn't make sense. at all in terms of their free cash flow analysis. So this is more of like a TA play from my eyes. People are just playing it from the TA's point of view, but I really want to emphasize this. Like, there's nothing going. Like, you can see, there's a lot of resistance from these price points, and now we are out of this area. Now we call it. Now we're going to go do something called a cup, the handle. So we here have a cup going on right here, and most likely we're going to see a strong downtrend as well in the near future. That's what I'm predicting with Nvidia, regardless of how people are like amazed about like how heavily they're involved with AI. They're just using the word AI for the sake of using the word AI. So this is a month-to-month basis right here. So you can see the cup has been filled, and then we're gonna see most likely resistance in the coming future for this company. So I'm not gonna do. I'm already done dead talking about this. You can see resistance is starting to form up here. I'm not gonna do too much tea on this. Overall, tech stocks are like all-time highs. Of course, AI. But the thing is, there is a good reason why they're doing this too. Is because AI will definitely be a long, long stay name. It's like social media. This is like the next social media because AI actually has productivity uses. Like, there's a lot of people using AI right now that increases efficiency a lot to a lot of industries, a lot of different industries. Um, has it affected mine? No, not really. I haven't seen AI being helpful in our industry quite yet. Um, but this is just kind of based on automation machines, so it's a little bit different. There's a lot of repetitive tasks that happens. Um, that doesn't need AI, which makes things a lot easier to follow up with. So that's Nvidia in a nutshell. But again, let's go back to GME. Enough me blabbering on. Oh, that's GMED. I don't care about that. GME. So enough talking about like a bunch of other companies just now. That's just the overall market right now. Everyone's just on the AI hype. Overall, um, GME is looking really a lot of pressure with the upcoming yeah, even their free cash flows doesn't look that good right now. It's not that great. But then again, their company execs are not they're not making too much sales. Like this person right here, she made her sales right here just for her yearly salary. That's just a yearly salary thing right there, because they actually have no salaries. These executives actually don't have salary. I want to really emphasize this, like they don't have salary. You can see like they very rarely give out shares, and they very rarely also make sales, just because they know what they have to do to make this company successful, and they're trying to make they're spending a lot of money on their infrastructure, and their infrastructure is now set up. Now they're just focusing on profitability, which is what I want to see. There's a couple things I want to see them address. Like this quarter coming up is very important to me. I want to see um their sales for their whole quarter, like what segment is growing and will continue to grow. I want to see continued perpetual growth on their segments as a retail company, just like Amazon, right? Uh, I have been there. I have been in their stores a few times right now. I just pre-ordered a PlayStation 5 recently. Their inventory is actually amazing. I think GameStop has transformed to just being a video game store to now I think it's honestly a lifestyle brand for gamers. I think it's really good. It's a really good direction. I got socks from them as well recently, and they sell all kinds of things. Like honestly, I actually had a hard time leaving the store just because there's so much inventory, and they're always different per store too. Like I went 2 different stores in my city, and they're all completely different animals. Like they're actually completely different things. And I look at the walls, and there's like so many different things. And I just recently understood like the whole Funko culture, like a whole Funko Pop culture. I didn't know about it. The employees are very well informed. They know their products very well. Because I always ask these questions, because again, I'm not informed on some products than others. Like I didn't understand the whole Funko Pop even when I was working at Indigo. Like I didn't fully grasp it, just because I didn't understand what was the point of it. But once I listened to their pitch a little bit more, I was like, oh, okay, so like there is some limited pops that actually do get resold, and I actually saw it being resold at Anime North, the convention. There's people who actually buy these limited Funko Pops, who eventually sells them again back on the market just because like they either no room or they just want to sell it at a higher premium. It doesn't matter. There's people who are willing to buy these things, so it goes one hand to out the other. Unfortunately, obviously, preferably it's better to have them actually traded in, preferably so that GameStop can resell them. But you know what? What's my point is, right? These Funko Pops are incredibly attractive to collectors, and the collector hobby has, I can definitely see it has definitely significantly grown. As I went to an anime convention and I walked around, and there's a lot of people who really love collecting things, right? Sure, anime is a little bit different than video games, but like there's correlation that there is anime inventory at GameStop. So I wouldn't be surprised if they have like limited time anime stuff, and which attracts those guys who are willing to spend any kind of dollar if there's any kind of limited like um figurine Funko Pop or whatever. I can definitely see the appeal for that. So again, this quarter coming up is an incredibly stressful quarter that I really want to emphasize that it's going to be very important for the future of this company, because and also perpetual future as well. I want to see continuous growth on quarter ones every year, if possible. Obviously, it'd be nice to see growth every quarter. Because that would be showing signs of growth. It is now a growth company rather than company that's trying to stay at a status quo. I want them to go beyond the status quo just to prove their company efficiency, because I definitely can see a company efficiency. But again, there also is some contraction involved with retail stores like GameStop, because again, quarter one, not a lot of people want to spend things. They spent most of their money in quarter four. Previously with their Christmas and all those sales and Boxing Day events and whatever events happening in that quarter, a lot of things happen in that time. And if they can show continuous growth, which means stronger cash flow, which means they're going to give their executives a salary, which means a flywheel effect. When we'll touch base on that next week, how important this is, and we'll use Apple as a comparison for using the flywheel effect explanation. So overall, um, no, you know, official news outlet wants to talk about GameStop because AI is like the hot thing right now. Even though, like, if you look at on a TA point of view, like this looks insane. If you look at GameStop, this just looks like insane. If you look at it on a 4 hour basis, where is it? Where's my 4 hours? For some reason, my stuff is not being saved. But on 4 hours, like this just looks like insane, right? And the reason why I choose 4 hours is just like for people who are interested in looking at swing trading, and also it's a good middle ground of like a full day and not a day. So you can see like it is shown strong momentum after strong momentum of swinging up. Like it doesn't look like it's slowing down. Let's look at a day-to-day basis here, right? It has been contracted multiple times, right? It has been attacked multiple times, but it has showed resistance 2 times this year already, right? Always showing new support levels every time. Very rarely does it actually hit these numbers. These are like this is the hardest squeeze or attack on right now on GameStop in the last. I really want to emphasize this. Like this has not been shown during this whole entire time back in 2022 and 2021. I really want to emphasize this. This is all 2021 right here, right? Obviously, support has been given, support has dropped in this time, but now it's being picked up again, and now it has shown strong resistance once more at this level. I mean, strong support at this level, but also there is a very strong downward pressure with the price action in terms of price action, right? Again, GameStop is one of those companies. Again, if you're in a situation as a company where you're making positive cash flow, there's a billion different ways to reward the shareholder, and we'll talk about that next week. So again, that's my report. I'm in the green with GameStop again, and I bought another $25 Canadian's worth of shares, which equates to, hold on, my thing logged out. Which again, we're looking at. Again, I just want to prove my point to those people who are just like, oh, I like. There's a lot of people who are just like doing fake bravados, which makes no sense to me. Like, who are you trying to prove to? Like, I'm gonna prove to you the idiots who are constantly talking about like, oh, go enjoy your day job, blah blah blah. It's like, yeah, I do have a day job, dude. I actually work for what I do, and I'm gonna make my money work for me, right? So I'm not gonna lie to you. I actually buy shit. I'm not gonna lie to you. I literally made this position just to prove my point. So what do you stand for, right? I don't care about what you do, right? This is what I do. So again, I'm just proving a point where I'm literally putting $25 Canadian every week just to prove a point where your excuse saying, "Oh, I'm gonna buy at this price point. I'm gonna buy at this price point." By the time you realize what you say does not matter, because GameStop really is that kind of company. What you say does not matter because um, you're gonna get burned, and you're gonna be missing out on something that you thought the company's worth when you should be reevaluating your story, right? I reevaluate my story multiple times when I want to enter GameStop, right? So, and I'm at the point where I'm in a situation where my dollar cost average is actually starting to meet up now. I'm actually hitting break even point on my 2021 purchases. So from this point on, like it's gonna be there's gonna be some possible strong headwinds, possible quarter 1, quarter 2, but at the same time, there's also just as much optimism. So this year is very important for GameStop to show themselves as a profitable company. So other than that, that's my rant for this week. We'll see you next week again with more trades, more buys, more news, AI, 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 and that's it.